going forward. For more, let's bring in Zach Perret, Plaid co-founder and CEO. Visa announced earlier this year it was buying the company for $5.3 billion. Thanks so much for joining us, Zach. Good to see you. Some fascinating takeaways from your survey, and no doubt lots of deep insights that you already have just from the company's engagement over the course of the year. How big has the step up in user engagement with fintech apps been? And is it just on pure fintech companies' apps, or are the traditional banks with their digital offerings seeing the same level of step up in engagement?
The past 6 months have been a sea change in digital financial services, or fintech, as we call it for short. We've seen a huge shift in consumer behavior away from walking into bank branches and talking to a banker, doing all of your banking in person. Now people are sheltered in place at home. They're not wanting to go out as much, and they need a digital solution. So we've seen a huge uptick in the number of people that are actually using digital financial services applications to live their lives. We as Plaid, of course, work with many of the upstarts, so Square and Chime amongst them. But we also have seen a huge uptick in the banks that we work with as well. So we're fortunate to get to partner with the likes of JP Morgan and Goldman Sachs, who've also seen a meaningful increase in the amount of consumers using digital financial applications to live their day-to-day financial lives.
In your survey and your other work, Zach, do you feel like people want to go back to the traditional banking practices, whether that's going into a branch or other areas in the long term?
What we've seen is that consumers have fundamentally shifted the way that they think about interacting with their finances. Historically, many people thought that they had to walk into a bank branch to do most things in their financial lives. Actually, the results of our survey say that 80% of people believe that they can manage their money in the future entirely without a bank branch. Now, importantly, that does not mean entirely without a bank. Actually, banks are core. However, the way that they'll interact with the banks going forward, it'll be more over the internet, more on their phone. People these days have a finance folder on their iPhone or Android that historically not everyone had interacted with, but these days we're seeing almost every consumer in the US using digital financial products.
I don't know if you saw the news today, Zach, but Chime managed to raise more money in another fundraising round valued at $14.5 billion, which was a company with a $1.5 billion valuation set in early 2019. So I know there's there's obviously momentum, and the pandemic has sped up the acceleration to digital banking. But do you think there's a bit of a fever here when it comes to some of these valuations?
Well, I won't comment on the specific of the valuations, but what I will say is that fintech itself, digital finance as an industry, is having a really incredible moment right now. When you look at the usage of these applications, it went up on the order of 70% during the early pandemic, during Q2. And when you see growth like that in applications, of course, the valuations will follow. But seeing things like Chime being valued at more than 14 billion, Robinhood being valued at more than 10, other companies like Stripe, for example, all of which, by the way, are Plaid customers, being at these very high valuations, it's incredibly exciting for the future of digital financial services.